Yeah, so the reason we think that emerging markets is a really interesting asset class as a whole is you have some long-term structural drivers that will drive growth over the next 5, 10, 20 years. So you have something like demographics, where you have an increasing population. You have urbanization, which tends to lead to high consumption. You have an increasing amount of women entering the workforce. And all these factors should lead to an increased consumption base and structural growing pool of profits. So we believe long term, there's a really attractive story if you invest in the right companies. So if you look right now, about 80% of the global population is in emerging markets, 60% of GDP is in emerging markets, but only 10% of total market cap is in emerging markets. We think that's going to change over time. In terms of the risk, I should say that we're long-term investors, so we invest on a 5 to 10-year horizon. So we don't look at sort of short-term volatility as risk as such. There are risks, obviously, investing in equities. We try to mitigate that risk by investing in what we define as quality companies. We define that as companies that have a strong moat, strong business model that sort of shields it from competition. They need to have a robust balance sheet. That means no, we don't like financial debt. We don't like a mismatch on the FX side. We want them to have a great management team that we can trust in and who have a track record of building a business. And then we need to be aligned with the majority shareholder of the business in order to make sure that they treat us equally. And I would just say, sort of, if you look at the categories we're in as such, most of the categories we invest in, or the companies we invest in, they're in categories such as dairy, toothpaste. So these categories tend to be quite stable in nature. So if you have toothpaste consumption in India, for example, you have several hundred people in India that don't brush their teeth. And the average guy in India spends about $1 a year on toothpaste, whereas in most developed markets it's $20. We believe that consumption is going to grow significantly over the next 5 to 10 years, combined with the population growth that's going to be in India. We believe our investment in the market leader in toothpaste company in India is going to benefit tremendously. Whether that's going to pan out over the next 5 to 10 months, it's very hard for us to say, but on a 5 to 10 year view, we're fairly confident that the company is going to generate a lot more cash, which is going to benefit us as long-term shareholders of the business. Yeah, so I mean, again, our approach is essentially to look at some of the long-term structural drivers that we believe are going to create a growing pool of earnings, which we want to benefit of as shareholders. So the markets we tend to invest in are less developed countries. So countries typically with a GDP per capita of $2,000 to $4,000. The reason is that we would like to, again, going back to the example of toothpaste in India, is that when you're at GDP per capita level of about 2,000, the consumption levels are very, very low. And once that GDP level starts increasing, consumption increases exponentially. So essentially, we'd like to be in the markets that have sort of low penetration are going to benefit immensely as consumers go from being quite poor to being lower middle class. So we're strictly bottom-up stock pickers. We're benchmark agnostic. So in terms of the active share of the fund, would be 95%. We have a fairly concentrated portfolio. We have slightly over 40 stocks. So we don't look at the top down. We obviously do look at some of the macro in terms of a risk, but we really try to pick out the best companies that we believe are going to generate most cash flow and give us the best risk-adjusted absolute return over a 5 to 10 year horizon. Yeah, so I'd say there's different approaches to that. So we have our main office in London, and we have a smaller office in Hong Kong where we have 3 Mandarin-speaking team members. So our approach is essentially we like to centralize it more. We travel extensively. So usually each team member will travel about once every 4 weeks. So a couple of weeks ago I was in Russia as an example. And we like to sit together so we can share this knowledge across the team and make sure we make the best decisions, have heated discussions in order to make sure that we make the best investment decisions that's going to generate that hopefully great long-term returns for clients.